Hello, everyone, and welcome to today's interview with Florence Bupta, the Global Sector Manager for Banking Insurance at FIG. We're excited to explore how recent deals fit into FIG's vision for expanding the insurance sector. Florence will also discuss the strategic advantages of these deals in alignment with IFC's sustainability agenda and share insights on leveraging the success of the advisory and investment services collaboration to pursue additional opportunities. What a pleasure to have you, Mrs. Florence. Could you please tell us, how does this deal with Pula fit into the FIG department's broader vision for growth and expansion of the insurance sector?
So let me start by explaining the context. Currently, insurance penetration across most African countries is less than 3%. And most of this coverage is on urban-based activities. Most insurance companies in Africa, in particular, are struggling to grow their portfolios. They face high competition, and they're going after the same risks year after year. With agriculture and inclusive insurance, there is an opportunity for these companies to target the currently untapped market. And that would give the insurance sector in Africa an opportunity to grow the available premium volume and to diversify their portfolios. Now, because this class of business is new to most insurers, the need for highly specialized service providers, such as Pula advisors, is critical in deal generation and in servicing the policies. Pula key product offering bundles insurance with input credit, which thereby enables the farmer to invest in higher productivity and sustainable production of crops, increasing their incomes and enhancing food security. Pula works with a number of AgTechs to bundle credit and input finance. This helps expand credit and insurance products to underserved smallholder farmers.
What synergies or strategic advantages do you foresee between this deal and IFC's overall vision for sustainability agenda?
IFC's FIG strategic goal is to support food security and job creation by SMEs, particularly in emerging regions such as Africa. Among these SMEs, smallholder farmers are critical because they need financing for input and other production services. Banks and microfinance institutions, as well as contract farming agribusinesses, are becoming increasingly hesitant to give loans to farmers without some form of collateral or risk protection mechanism. Due to climate change, more frequent and more severe events such as droughts, hurricanes, floods, and hailstorms are affecting agriculture production, making the need for risk mitigation that much higher. So agricultural insurance provides the needed comfort for these lenders, unlocking the required financing for sustainable agriculture and SME sector development. Insurance becomes part of an ecosystem of financial and non-financial services that are offered to these smallholder farmers, which enhances their access to inputs and to markets. Index insurance products in particular, like the ones that Pula designs and channels, can cover both smallholder farmers through the aggregators, but it can also provide an important tool to governments to enhance their capacities for disaster risk finance. Such insurance products enable governments to put in place an ex-ante disaster risk financing plan, rather than wait after a disaster has happened to find the money to rebuild.
Based on the successful collaboration between the advisory and investment services, how do you envision building upon this project to explore additional opportunities?
So the partnership that led to the Pula investment was one between IFC, Syngenta Foundation, UAP Insurance, and Safaricom in Kenya. Kilimo Salama provided much-needed information to farmers via digital means. It has since become a sustainable, profit-making business called Acre Africa, which is present in multiple countries. And now, Pula, together with Acre Africa and other stakeholders, work in these markets to further develop the sector. So one of our goals is to identify these types of clients that may not initially be ready for investment, but that could benefit from advisory services until such time as they're ready for investment. We're currently doing mappings in different developing markets across the globe to this effect. And our advisory services are meant to help these clients grow their portfolios and provide technical trainings so that they can increase their capacity to levels that will then necessitate additional capital, thereby unlocking investment opportunities for IFC.
We express our heartfelt thanks to Florence for her invaluable contribution to this interview and for sharing her insightful perspectives with us. Until the next opportunity.